Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with company GDM. In today's session, ladies and gentlemen, we will take a look at one of our very old trading systems. Maybe we've covered it like a year and a half ago, maybe even longer than that. Today, however, the session will involve a revised type of swing trading system that the involvement of the technical indicators into that system will not be changed compared to the system that we've been using, so many years ago. But what I'm trying to say is the setup of today's system can actually make it a separate type of system. Basically, it has come to my attention that this system that we're going to talk about today was performing quite inadequate, compared to the market conditions that we're facing today. Or when I'm saying today, meaning in present days. So a year and a half or 2 years ago, when we spoke the last time about this system, when we presented it to you guys, it was quite perfect. It was working in all levels, let's say, within all cylinders. But the fact that fundamentals and market conditions are changing day by day, we need to stay focused on what is the most important factor of today's market. And compared to the fundamentals, we're facing mostly technical systems in our webinars, but when we have to compare all of this to the fundamentals of today, that would require a few adjustments so we can have more accuracy, to filter all the false signals. So I have been looking at this system for quite a bit of time, for several months now, and I have totally seen that the system that it was before was not acting as it should. So during the whole period, as we've been presenting hundreds of different trading systems for all type of traders, we cannot really cope with the amount of systems that we have under our cap. So we can check all of this, whether it's still valid for the market or not. Therefore, we mostly rely on you guys. So basically, when you see that something is off, something is not right, we rely basically on your signals, on your phone calls, on your emails to give us a heads up that the system that you've been using for, let's say, 2-3 years now is not performing well enough for you. Basically what I'm saying is that no one is actually using this system because you have to use it. You're using it on your own risk, on your own peace of mind that the system that you're using is expected to perform as adequate as presented. Therefore, we have had many cases in which we have revised a lot of our systems. We're mostly tracking, those that are, let's say, more complex, those that need adjustment from time to time to work well enough. And basically, we're keeping track on the systems that are mostly used by the traders out there. In today's session, we're going to take a look at a very, very nice, simple swing trading system. It will be on the 4-hour time frame. Before, we've been using it on the 30-minute chart. Right now, the better performance of the system can be spotted, can be traced on the 4-hour chart. Based on the conditions of the market of today, we need to understand that, let's say, the volume, the market momentum that it's building takes, let's say, shorter or maybe longer time to build, so we can have an adequate signal for long position or short position, or for exit, or let's say for particular protective stops. All of this gives us enough to work with. Therefore, today's system, we will talk about the relative strength index, the stochastic oscillator, and the Bollinger Bands. All of this we have covered in many types of webinars and trading systems so far. However, the combination of these three right now on the 4-hour chart, their settings and their performance as a whole, gives us a very good system that actually filters a lot of negative signals. It took me quite a while, of course, to work on this to see whether it performs well on the live chart, on the live servers, on typical market conditions when, let's say, we have a lot of market news or less market news, based on the fact that there is a lot of traders out there, ladies and gentlemen, let's admit it, that are not interested in day-to-day fundamentals. They're mostly relying on technical indicators to signal buy or sell positions. Now, let's give it a go with the first technical indicator right now. We will go for the Bollinger Bands. I have preset it, the periods, the valuations, and deviations of all of the indicators, basically because I would like to save time for you so you can go ahead and test it on your own if that's what you wish. The period for our Bollinger Bands will be period of 50 right now. We have widened a little bit the range of the moving average. Basically, the 21 period that we've been using so far was giving us a bit of a too much false signals, according to the rest of the indicators. They were not aligning in time perfectly so we can catch the moment of when the market is up to make a move. Let's put it this way. Also, based on the fact that we're talking about the 4-hour chart, as you can see up here, we need to have a peace of mind that the market is going to make the move that we're expecting, but with just a few sessions after, which actually makes it quite reliable, because we know whether we're full-time traders or we're trading part-time just to fill up a few gaps into our daily lives and in our wallet. Well, let's put it this way. We need to have a little bit more time so we can put our positions on the market. This is how it looks. You might be seeing it's a little bit too wide. That's basically the deviation that I've chose. So given the fact, ladies and gentlemen, that the momentum, market volatility in our present days is quite huge, especially when we talk about major currency pairs or commodities which we normally trade, like gold, oil, silver, natural gas, so on and so forth. We need to understand that the fundamentals today are shifting the market so fast that normal 2-period deviation of Bollinger Bands are getting us a little bit too short on our profits or on our entries. The 50-period moving average is a very important moving average, ladies and gentlemen, along with the 100 and 200. Now, I'm normally not using the 100 because it's irrelevant to the systems that I'm normally used to, but the 50 and the 200 are those that always persist on my charts, despite the fact that I might be using different systems every time. So, right now, the moving average tracks the last 50 candlesticks or the last 50 sessions or periods on the market. The deviation of the Bollinger Bands give us somewhere in the midst of 90% of where the market is going to close. Now, if we go for about deviation of 2, that's between 30 and 60% of where the market is going to close. But driving it between 60 and 90%, we will have a little bit more accuracy as you can see here on this morning star formation. We can see that this 10% is bringing it out of the Bollinger Band, but the next few sessions are closing within it, which gives us a very good example of why the deviation of 3 will give us more importance to our system. Now, the second, we will just go ahead and place the relative strength index first, because the levels over there are going to be the same as the stochastic. Basically, on the stochastic, I'm just removing all of the periods. I don't need them because they're pretty much the same. You're going to line at the same place as the relative strength index. But as we've been talking many sessions before, the difference between the relative strength index and the stochastic oscillator is very little. Both of them are market momentums. Both of them measure volatility. But most of all, we need to understand that the formula of one of compared to the other, they measure, one of it is much more faster than the other. So basically, in this case, we are going to make the relative strength index faster than the stochastic. Before, on our previous phase, let's say, of the trading system, we've had the normal usage. Basically, the relative strength index was slower, the stochastic was faster, but right now we're turning the things around, and you will see in a few minutes how it works better than it has been working before. Basically because we have different market conditions. One more time, fundamentals are changing. Different conditions are driving the markets every day. 2 years ago, we didn't have U.S. interest rate hikes. We had bond buying programs when Ben Bernanke was the Federal Reserve Chair. So right now, we have 50 basis points for interest rates in U.S. We have increased bond buying program from the European side, okay? All of this is changing the things around, so we basically have to switch the direction of our indicators so we can match the market conditions. This is as easy as I can actually explain it to any trader. Parameters here, as we can see, period is now 3. Before, we've been using period of 14, but we needed to make it a little bit more faster than the stochastic oscillator. That's why we're going down a notch, and that's quite a bit. That's 11 periods down from what we've been using before. This is how it looks. The extremums right now are not what we've been using before, is 20 and 80. Right now, those extremums of 10 and 90 are only going to be used for our exits. So this is the place where I can tell you that our system is not pip-based, is not time-based or price-based, which means we need to rely on these indicators to give us entry, exit, stop loss. That's as simple as it is. Let's go ahead, plot the stochastic oscillator. However, that's the key figure here, ladies and gentlemen. The stochastic, we're actually going to plot it straight on top of the RSI, like this. You just go to your navigator bar, find your stochastic oscillator, drag it on top of the RSI, and then you will have here the menu where you can actually change the parameters. For today's session, we're going to use the basic settings, or the default settings, 533 for the stochastic oscillator. However, the thing that we need to understand here is that we do not need the signal line. That dotted line that gives you basically the crossover signals on the stochastic oscillator with the main line. But right now we need the main line. And I've made them, the relative strength index goes with the aqua blue, and this one is red, and this is pretty much what it looks like. For some of you guys, it might look a little bit too choppy, or probably it's not exactly what you expected, but let me show you what we need it for. Now, it is also pretty much expected that we're going to use the crossovers of the two indicators, mainly the relative strength index and the stochastic. Why do we need that Bollinger Bands for? We know that the middle line is a moving average. Based on that, we know that moving averages are usually considered as strong support and or resistance levels. Therefore, we can expect bounce to the previous market direction when the price reaches the middle level. So given the fact that the market is, let's say, in this condition, which is unchanged so far, it's a downward direction for the euro versus the dollar, and we can see that the market is reaching a tipping point here on the 50-period Bollinger Band, or the moving average, which is the middle line. And of course, afterwards, directly, we have a crossover of the stochastic versus the relative strength. But as we already have figured, the two indicators now have a switched role. The relative strength is faster than the stochastic. So basically, we can allow that stochastic to go a little bit higher because it's slower, before it starts dropping down to show us that the volatility is dropping or the market momentum is building to the downside. Let's put it this way. But that particular crossover is what we're interested in. And given the fact that we're talking about a 4-hour charts, in many cases, in more of the cases that you will face, you will be able to enter not exactly on that crossover, but you will have the time to enter exactly afterwards. So you can pretty much go for short positions over here and close it when the market reaches oversold conditions on the level of 10, right over here. Okay. So for our exits, right now we need at least one of these indicators to touch that level. Why do we need at least one? It doesn't matter which one. You will see later on how, if you're waiting for one specific, the system will actually get you back to your zero level, or should I say on break even, and you won't be able to grasp those profits because sometimes the volatility is so big that the slowing indicator, which is in this case the stochastic, is reaching oversold conditions even before the relative strength index. And this is let's say an anomaly, okay, within the indicators, because one more time, there is nothing 100% certain. We need to be prepared for all of this. That's why I've tested it. I've seen that in 90% of the cases, at least one of these, if it touches this 10 level or 90 level for bullish positions, if you exit there, you will have a peace of mind for your profits. Now, given the fact that the size of the particular positions are somewhere between 30 to 100 pips, sometimes even more, within a few sessions, that gives us something very, very concrete to say that this particular system is quite affordable, even for small accounts, even for big accounts. Now, imagine here in this position, we have about 616 baby pips, or 61, normal pips. That's that equals $616 with one lot tradable, and it comes on the exit right here. You can see right down on the level of 10. You can see that candle, and this is right before the market starts thinking whether it should keep going down. Of course, this is something that the system is not focusing on, but it's mostly focusing on the accuracy of the signals regardless of the size of any potential profit. I hope I was clear on that. It doesn't matter the size of your profit. It can be 10, 20, 30, 100, 200, or maybe 300 pips. We are relying on these rules that are protecting us from total disaster, let's put it this way, because I have seen many accounts going sky high just because someone decided that the market could continue down. What if it doesn't? And the role of the Bollinger Bands in this case is to reassure us that the market in up to 90% of the cases will close within these bands. And it does over here. Nobody says that it has to 100% touch the lower bound here before it starts reversing. There is no case that it can actually tell you that. And the good thing about that system is that when we're looking about, to take bearish positions, we don't necessarily have to have those indicators crossing over with such perfect conditions up here. But we only need them to cross exactly when the price faces resistance around that 50 period. And of course, vice versa is for bullish positions. We will start scrolling back and you will see how the system performs. You will see exactly what I mean when I meant a few minutes ago. It is very important at least one of these indicators down here to touch the oversold or overbought conditions on the indicators so we can exit our positions. And of course, I will add to that something in addition to our stop losses. Okay, based on the fact that we're talking about a deviation of 3, that's a pretty big deviation. So we don't really want to have a lot of, very big loss. Let's put it this way. It's very easy to lose money on the market, but it's very difficult to gain it back on. So a very good trading management system, money management system, you will have to have. As I can see here, there are a lot of highs and the price has been testing several times this 50 period. This is what I've configured to be the most appropriate way. I find the last highest high on my chart here to be my stop loss. Not anywhere higher or lower, just at it. Now this is roughly about 80 pips to the upside, plus potential of 60. So that gives us about 1.5 risk-reward ratio, which is pretty good. I would say it's not 2 to 1, it's not 3 to 1, it's actually 1.5 to 1, which gives us very quick exit with a very good stop loss. Also, a stop loss that you can use is the so-called trailing stop. This is something that it's also good to be used. You can just go ahead and plot some particular amount that you're ready to lose. Let's put it this way. Very easy to explain is, let's say you have $1,000 in account. Your risk management system is 10% out of your whole equity, or let's say you have bonuses or some other preferences, which is also a good place to add that all of the participants of the webinars have the ability to receive a particular treatment, better treatment from the company, let's say a bonus system or a type of rebate system, I don't know, something that we have settled for the day. And if you would like to find out what it is, you can always find us on our telephone numbers in our website, gdmfx.com, or right after you open the website, you will find on the bottom right corner a pop-up chat where all of your questions will be answered within a matter of minutes. And you will find it very easy to get in touch with one of our account executives to, of course, find out what is the particular best type of a bonus system that you might be getting at this stage, based on your knowledge on the market, based on your particular needs or requirements. This is something that is always customized by our account executives. So back to our risk management. If you have $1,000 of account and you're ready to risk, let's say 10%, because it's much easier for any person to understand, that means these are $100. So imagine that we have a particular profit of roughly around 600 on a lot. That means from this position, your trailing stop should be above the $100, or in this case, somewhere about 10 pips on a lot, which of course in this case is pretty small stop loss. This, of course, is always about scalpers, or for those that would like to enter on the larger scale, on the larger time frame, and go down to 15 to 5-minute chart for a quick exit. This is also possible. However, it is not recommended. By saying recommended, it is not perfectly fitting into the system's preferences. It's better to find the recent high and put your stop loss at it, or just a few pips above it or below it, to protect your assets. Now, let's have a look a little bit backwards. We saw how this particular position plays out. We have another case here of the crossover. Over here, you can see how that crossover occurs right at this small bullish candlestick here that faces extreme resistance at the 50 period. It doesn't matter if it's a sideways direction. The cases are still the same. You will find the short-term trend anywhere, even on the sideways direction. That's why this system is so nice, because you can use one currency pair with the system and profit all day long with it. However, most of our traders focus on more than one tradable instrument. That's why a lot of them are quite profitable and find it extremely intriguing to use some of our systems together with their own trading plan. Now, from here on that crossover, we're entering because the conditions are met. The price is at or near that 50 period moving average. We have a crossover along with it, and our exit comes down here when at least one of these indicators touches that 10 extremum down on the relative strength index. That's the aqua blue. And as you can see, from here to here, we have another 60 pips or another $600 on the lot in about 8 sessions time. So that gives us enough time not only to enter, but to consider our exits. Let's see a few more examples. Why the system is protecting you. We see that crossover here, okay? The signal here is telling us we might have some bullish direction, okay? Very nice. The market right now is under that 50 period moving average. Even if you enter from here and exit here, that's about 80 pips. That's one case. But you might witness here that we're not anywhere near that our particular signal is not giving us an exit. And what happens is that the market reverses and goes directly into reverse direction in this case. So this is one of the cases. We will face some more of these cases of where the market is, the system will protect us from the market. However, here you will see that the crossover occurs to the downside, one more time, to the downside here, and our price is up. One case in which you might salvage a few pips of profit. But the complexity of this system is protecting us from cases like this. You have a downward pressure here. It's very clear that it also occurs over here. But that 50 period is not going to permit us to continue with the system because it's in controversy to all of the rules that the system is providing us. Quite the opposite, however. We have a crossover here to the upside with the price up here, giving us an exit straight over here, about 739 baby pips, or about 74 pips. Right at this case or at this one, it's relatively the same. So I would prefer to have these in line, no matter if the crossover is below that 50 level. I just placed it here for a better navigation of where the pressure comes from, whether it's from under up or from up down. You know, it's something that a lot of traders prefer to have on their charts. But that crossover in the market conditions met within the system in a relatively tight 160 pip range of the euro dollar, which continues for a long time, maybe a few weeks here as we can see it. give us an opportunity to even take these small opportunities. And believe me, when we keep going backwards, we will face the same conditions here. The price breaking below here, confirming below it, and the crossover gives us a very quick 700 pips of profit down on our crossover, or let's say when the market goes into oversold conditions here. That's why I'm saying that it's very good to exit at least one of these indicators to touch those extremums. You will see how market volatility, market momentum can pull it straight back the other direction, even if you are waiting for any of these particular. So you need to wait at least for one. Another case where the market is giving us a little bit of a heads up that the market is not yet ripe for us to enter is a very long sideways direction, about 9 sessions and just about 24 pips of salvageable profit before the market actually gives you the signal to enter in profit, roughly around $700 in a matter of 2 sessions. A condition in which the market is telling us the same thing is over here. And as you can see, it continues with false signals for quite some time. So a particular case where probably the market will give you something to get your hands on is not enough for any of us to make sustainable profits for a long time. A case, however, is a very good example is this one over here. We have roughly around 50 pips, that's $500 on the lot from here, from our entry. It's even a little bit low over that, but let's say $500 in a matter of 6 sessions in this case. Same case over here, the crossover, the price that it's pushing lower on this crossover, and the very quick $900 or even up to 1,000, close to 100 pips profit on the lot. Let's have another look at what the market is giving us. This is also a case where potential profit could be made, but I would definitely stay away, because for the many months that I've tested this system, there were a lot of cases where I will face difficulty in getting a profit larger than let's say 20-40 pips out of this condition, you know, for as many sessions before the market actually signals a downside. And again, here, as you can see, the market is telling us that it's going up, but it actually faces difficulty and goes down major. Let's see here another case of a very good bullish position. Comes at this small doji here. Of course, our exit is way off, right about over here or over here. I would definitely exit over here because I might not get the chance to have another spike like this one. This is roughly around $500, as I can see here on that crossover. See, both of the indicators are touching these extremes of level of 90 on the RSI, but another pullback here and another shot up is giving us a very nice sideways direction for a considerable amount of time with a few false signals. And ladies and gentlemen, this is only one case in which a crossover like this one, for example, you know, when the price is already above it, we cannot take as a risk. So the system can actually protect you and give you pretty good profits for quite some time. Now let's see another case of potential profit where we have the crossover and our price facing difficulty. And as you can see, there are of course a few cases in where the extremums here would not be achieved. In fact, a stop loss could be hit. But as I mentioned, this is close to 90%. Now we have already went maybe over 10 different particular cases back to July, month of July of this year. to see that, you know, from July up to now, maybe we have one case in which we will have a stop loss hit. But that's why it is a stop loss, because it's protecting our assets. And it doesn't matter what the conditions are and how much money we've lost on that stop loss, but it's actually what it matters, and this is how much more are we going to make from now on, or continue making furthermore. Now I can keep scrolling backwards and backwards on the same system. It's still going to give me absolutely the same particular amount of signals, you know, 10, 15 positions, one stop loss hit, another 10, 15, 20 positions, probably one stop loss hit. But one more time, the absolute must is to keep the rules in play. Always your price, if you're going for bearish position and that cross from the relative strength index and the stochastic is occurring to the downside, then your price should definitely be below that moving average, or here of the Bollinger Bands. Or as I mentioned earlier, the Bollinger Bands are also as another reassurance that the price have to close within these boundaries. Now if you start seeing the price going outside of it, that is an extremum that goes within the 10% of exception, which is also telling us we should get out of this position no matter how much money we've made so far, or the possibility of many more, you know, because let's say our stochastic or relative strength index have not already hit the extremums where we should actually exit. That's why we need the Bollinger Bands, and with combination of the middle line, which is the 50 period moving average, we have a very complete, very neat, extremely profitable and very safe trading system. However, I have to always warn you that you are using these systems on your own risk. We do not give you trading advice. We do not give you any trading recommendations. This is a system that we have developed on our own and has been used by our traders in the company. So whatever that you use, you have to use it on your own risk. One more time, let's have a look at the particular settings of the system. We have let's see here, Bollinger Bands, period of 50, deviation of 3, and the stochastic oscillator default settings of 533 with only the main line that we need, the signal line we're eliminating by, you know, putting the same color as our background is the best way to eliminate it in MT4. Also, the relative strength index is with a period of 3, which makes it much more faster than the stochastic, and therefore we have a very good complete system. Well, ladies and gentlemen, thank you very much for joining us today. One more time, as I usually mention in all my webinars, the sessions are usually recorded, so as soon as we master it, as soon as we upload it into our YouTube channel, you will be able to review it one more time or many more times as you need to, of course, refresh your memory of today's webinar. Thank you very much for joining us. I'll see you on Friday. Furthermore, we have more systems for you which could be interesting for your trading plan. Thank you very much for joining us. And of course, if you like us, rate us and like us on Facebook. Thank you. See you next time. Bye-bye.